Hello everyone, today is September 10th and this is our first session of the Wyckoff Trading Practicum course. This session is open for everyone, so we have two groups of people. We have students who already signed up, so I'm looking forward to spending the whole semester with you guys. We have a lot of material to go through. We have a lot of exercises to go through. I see that a lot of you have signed up again for the practicum. That pleases me a lot because it tells me that whatever we're doing it, in the correct way, and education is that we provide, is valuable. So thank you for coming back. For those of you who are new, there is a second group here for this presentation. This is, an open door. So welcome guests, and obviously we would like you to become a part of our class. Now there is a catch here. Usually I do not do the open doors for the Wyckoff Practicum. And the reason why is because Wyckoff Practicum has a prerequisite Wyckoff Trading course. Wyckoff Trading course is a foundational course, and then students graduate to the practicum. And in practicum, we discuss intermediate advanced concepts and we practice those. But I kind of wanted to open up this class so that you guys would see what exactly do we do? What is it that you want to strive for in your education with us through the first Wyckoff Trading course? So this is a preview for those of you who are guests. Obviously, if you want to participate in this particular class, you have to make sure that you have the prerequisite, the Wyckoff Trading course, and then you can sign up. If you have any other questions, contact me or Nancy at wyckoff@gmail.com. We will be glad to address any of your questions. We're going to have 15 sessions. The alumni rate is $598 over the $898 for the whole course. So for those of you who are alumni and you're still thinking this is a good price for 15 sessions, so I would be really happy to see a lot of alumni in this course. The next two sessions in September is going to be on the 17th and the 24th at the regular 3 to 5:30 Pacific. As usual, I'm expecting all of the homeworks to come only in one file, if possible, PowerPoint or PDF. And obviously, just mention your name, the course, and in the title, just put the name of the course. All of our sessions are interactive, as you guys know, so therefore, for those of you who would like to interact with me to go through the exercises to analyze, and kind of to be a little bit in the hot seat, and usually by this time you guys are more relaxed, we are not really concerned about making the mistakes. What we want to do is we want to make the mistakes and we want to analyze why we made a mistake and then correct it. So mistakes are really welcome here. So, it's kind of like a very relaxed atmosphere that we have in this class. So remember just to have a built-in microphone because I will talk to you. All of the recordings and slides from this session will only be available to paid students. That's usually how it is. You guys will receive the access information and instructions on how to get to those recordings and slides. I think tonight, not tomorrow, tonight. We'll do that. All right, sounds great. Let's go. As usual, all of our classes are for educational purposes only, even though I'm showing you my trades, and I will be showing a lot of my trades throughout the semester. We will be talking about a lot of actual examples in this semester. Those are still for educational purposes as well. I'm obviously stating this with the idea that everyone has their own trading style, and however I trade and whatever I show to you guys is not necessarily the best trading for you, so you kind of have to know this. And I'm also saying that this is all only for educational purposes. What are we going to study? So this is important, especially for those of you who signed up. I've been diligently working on this curriculum for the last 5-6 years or so, and it's always expanding, and it's always kind of go into the depth of the material. And practicum is a very special class because it's the intermediate and the advanced students and the graduates of the WTC course. So we speak the same language. We understand the same concepts. It's easier for us to communicate rather than when you sign up for WTC course. So therefore, it's easier for us to have a much more in-depth discussions on the subjects. So with all of our 15 sessions, what are we going to go through? Well, obviously, all of the knowledge that we acquired in the Wyckoff Trading course, we want to understand how to apply it and how to apply it consistently and profitably. So this is going to be a main focus. We're going to do this through the drills and exercises. Therefore, a practicum, we are practicing, and we are very deliberate about practicing our knowledge. We're going to have a lot of concentration on bias and timing. So we want to recognize the bias as the price still in the trading range. And then we want to understand and identify the timing as to when the price is going to leave. And both are very challenging. We're going to add one more to that. We're going to talk about the character with which the price should move. And this is also a very advanced concept. It's important for us to understand how the price is going to move, because we could be thinking about specific strategies and exploiting the most optimal strategies, extracting the most potentially, the most amount of money. So that's what we will concentrate on. Those are going to be our fundamental points of focus. But then the next segment is extremely important: trading tactics and management. We spend a lot of time in the Wyckoff Trading course on the analysis itself, and rightfully so. Whenever people come to me and they say, well, I want to concentrate on developing my intuition in trading. And I understand the idea, and I've been there when I was a beginner, and I also want to develop that intuition when I was a beginner. My answer now, after over 2 decades of trading and now over almost a decade of teaching, is that forget about the intuition. Concentrate on knowledge first, then concentrate on skill, and then concentrate on everything else, like mental execution. Why am I saying this? Because time and time again, when I see that people try to attend to their mental landscape or how they mentally execute the trade, in a lot of cases, the mistakes come actually from the analysis itself. So in other words, they are not fully ready to be consistent with their analysis, and they go and they are executing, and on the top of the bad analysis, they have bad execution mistakes and then bad mental mistakes. So therefore, concentrate on knowledge first, then concentrate on skill, and then concentrate on your mental practices. So what are the trade management or execution points that we're going to discuss here? Obviously, different price structural scenarios. Those we started discussing in the WTC course, and we're going to continue heavily, residing in that space. We're going to be talking and developing different bullish, bearish scenarios. As I've told you in WTC course, it's important to develop those. Why? Because mentally we have to be able to switch the bias if we see any signs of the confirmation or a failure. And it's easier for us to develop the scenarios and then follow them rather than be surprised by how the market behaves. Trade management. Well, this is also very crucial. We want to understand where we are getting into the position, where we are putting the stop losses. How do we move the stop losses? Where do we exit? How do we scale in? How do we scale out? Those are extremely important points for us. Risk management. I started talking about this in the last semester on kind of like very rudimentary level, and I think that this material is going to start developing more and more. We want to understand what's the risk per position that we are taking. We want to understand the risk per portfolio. We want to understand the risk that is correlation risk to the assets and instruments that you do have in the portfolio. We want to understand how in the campaign we could, mitigate the risk if we have a long-term position. We also want to understand, the risk that is related to the structure itself. So in this material, obviously, as I said, we will be developing more and more. Filtering trade candidates. Well, filtering is always, a big deal. So we have a bunch of exercises that we're going to go through in filtering, and that's going to be it. And then advanced Wyckoff analysis. So this is just kind of a continuation of the WTC. This is one layer down, one layer deeper. We're going to talk about different behaviors by different market participants. I'm going to introduce today just a couple of ideas, actually from WTC. We're going to talk about the volume signature. We're going to spend a lot of time on trends and recognizing where we are in the trend, structurally, where we are in the trend on the relative performance, and so on and so forth. We're also going to look at some historical examples. I'm going to bring a lot of the analogs, well, hopefully. And then we'll also use modern TA tools, technical analysis tools, in conjunction with Wyckoff logic and Wyckoff structural analysis. And that will help us out tremendously to visualize some of the concepts. So we have a very busy agenda for the practicum, and I'm really excited to start this course. Practicum is always my favorite course because of the conversations that we do have here. So hopefully for those of you who are guests today or you're just watching the video, you guys will get a good sense as to, what to strive for, what to educate yourself towards, and what do we do, at wyckoffanalytics.com here, what kind of education we provide, in order for us, to be better traders. All right. For those of you who are interested now in the practicum, but you haven't taken the WTC course, the Wyckoff Trading course, here's the curriculum, and I'm not going to go through this. I just want you to stop the video, and kind of like go through this yourself. But the main things here is that it's all about analysis. So we're concentrating on analytical filters. We're concentrating on the market structural analysis, on the analysis of the volume and price, and relative and comparative analysis. And in those different areas, we have a lot of, sub-segments, whether, in the structural analysis, it's change of character, change of the structural environment, Wyckoff events, Wyckoff phases. Under the price and volume analysis, the main theme is going to be about effort and the result. We will discuss a lot of this here in the practicum. This is one of the cornerstones of our analysis. We will talk in WTC about the bar by bar analysis, VSA, swing by swing analysis, volume patterns in different phases, historical analogs, and then, on the relative comparative analysis, we'll do a lot of filtering and scanning and some basic knowledge understanding as how we look at those. All right. So for those of you who are interested to sign up for the WTC, sign up today. You will get free WMD sessions. So that's what I would suggest to you. All right, homework. For those of you who are already students in this class, or for those of you who will be students in this class, I want you to right away look at the homework and start doing it. Do not wait until the last moment. I want you maybe, to come back to your homework and thoughtfully to go through this again. There's going to be a couple of not necessarily mandatory assignments that I want you to do, but I'm assuming that you guys are going to be a little bit more active in this class. So preferably, I would love you, to do these assignments. Our first assignment is very easy. We're going to have a conversation in the next class about the practices. How do we practice trading? And for those of you who are going to say that, practicing trading does not have a really good merit, I would highly disagree with that. And I hear that from time to time from students that come to us. I truly believe in practice. I think a lot of you, professionals there in your own fields, you believe in practice as well. It's because repetition makes it perfect. And then we will talk about what kind of repetition we want to make. I'm actually incorporating into my daily routine my own practices where I'm just basically not answering emails, not picking up the phone, not looking at my trading at all. I'm just practicing, deliberately looking at some concepts and going through those. And we'll talk about this. So there are two articles. One is actually a chapter from the Outliers book by Malcolm Gladwell, and I'm sure a lot of you have read that. I have read that. The chapter is going to be 10,000 hours. So we're going to approach the practice from quantitative point of view. And then one of my favorite articles on the deliberate practice, the mundanity of excellence. And then, guys, I will also give you a couple of other articles, in the next week. For those of you who like this subject, optional reading. But the mundanity of excellence is an excellent case study on the Olympic swimmers and how they practiced and who of them actually qualified to be in the Olympic on the Olympic team and who didn't, and what was different between their practices. So I want you to read this, and there is also some questions that I want you to answer. I want you to think about your trading and to answer a couple of questions. And that is, what is the number of trades that you have per year? How many hours per day do you spend on educating yourself? Not just trading, but educating yourself about trading. Maybe going through the selection algorithm, maybe attending some classes, reading some books, listening to podcasts, and so on and so forth. I want you to think about these concepts, and we will discuss those in the next class. Because our time here in this course is limited, even though it's 15 sessions, but we want to be extremely deliberate and precise as to what we study. And I'm extremely serious about when I develop the curriculum for the whole course. I'm going through all of the subjects and topics that we're going to talk about, and I'm sequencing them in the logical way so that there would be some bridges between what we've done before, what we're doing in each session, and where the class is in general, just as a group. Okay, great. So this is assignment number 1. Assignment number 2, I'm going to explain in a second. It's going to be a bias game. So we've had a huge success with students in this class as well, in the practicum in the last 2 cycles, where one of the weekly home assignment was to always analyze 1 chart or 2 charts and to define the bias, distribution, or accumulation. And this is a great exercise to do throughout the whole semester, and just to stay on course of analyzing by yourself, coming to the next class and actually listening to me analyzing this chart as well, and seeing where there is a discrepancy between your analysis and my analysis. And throughout the whole semester, I will ask you to keep the tally of how many successful bias games you've done and how many unsuccessful bias games you've done. That number, that percentage, whether it's 20%, 30, 40, 50, 60, 70, 80, whatever number you're going to have, is a reflection of your level of knowledge right now. And I usually say if you're under 40% for this game, most likely this means that my advice would be to you to stick with education, and until you actually hit the bias game consistently above 40%, don't be very aggressive with your trading. And that's what we do, with this game. It looks like a game, but there is a lot of education behind it. And then the last assignment is optional assignment, and I'm extremely excited about this too. These are kind of like the new innovations that we're bringing here in our education. This assignment is going to be about specific stock, Aurora Cannabis. I do have a position in the stock. So I'm going to show you exactly where I entered that position, on which side, and we'll talk about the analysis of this stock. But to talk about the analysis of the stock intelligently, I would like you to analyze it. So please send me your analysis to wyckoffAssociates@gmail.com with the title that this is the practicum homework number 1. You could mention the ACB symbol for Aurora Cannabis. And throughout the whole 15 sessions, we will have an anatomy of a trade segment. This is going to be a real-time position that I already have. We're going to discuss it, and then as a class, we're going to vote. You guys are going to vote what we're going to do with this position. Are we going to close it? Are we going to open in this position, add to the position? Or are we going to do nothing? So very exciting. We kind of have, a lot of elements throughout this class where, we have the real-time market, with the anatomy of the trade segment. We have an educational game on the bias that's gonna go on, and then we have a lot of material that I'm just gonna give you during the class. And I'm anticipating that we are gonna interact a lot, guys. So just be prepared for that. Just a quick reminder for those of you who are guests, this session is being recorded and we will post it on the Wyckoff Trading Method YouTube channel tonight. For those of you who signed up for the course, the Mundanity of Excellence and the Outliers articles will be posted tonight together with the class video and the slides on our class page that is behind the password wall. So you will receive the access instructions to that page tonight as well. Awesome. Okay, so here is your first home assignment. This is the first bias game that we're gonna have, guys. And usually, in the last cycles, I had, 2 charts for you to take home and to go through. We're gonna start with one, and then I just wanna kind of like, once we're in a more, in a smaller group, then we'll decide, how many charts we're gonna have. But this is the first chart, so have a look. Here is your trading range, and the game is very simple. What do you think? Is this an accumulation or is this a distribution? Some student, from this class, from the previous WTC class, who plays this game, on Twitter, and I'll talk about this. He commented that sometimes we leave the last bar kind of like in the middle of the range. And that if we would have some kind of more or less definitive reversal shown, it would be easier to define the bias. That's not the point, guys. If I would be showing to you the last bar reversal, then it would be easy to guess what this is, correct? I want you to think and analyze from the beginning of the chart to the end of the chart. I want you to understand the environments, the textures, the structure itself. And I don't want you to guess by the last bar. I want you to create a Wyckoff story. A Wyckoff story is a sequence of events that unfold throughout the chart. And when we come to the last bar, we are basically already have a developed bias as to what it should be. So, and we'll talk about this more, but here is your first home assignment. So for those of you who signed up, go for it. I mentioned the bias game, and I mentioned it that we play it on Twitter. Very popular on Twitter. This game comes out each week on Wednesdays. And you just have to sign up for our Twitter. We also have a lot of the free material that you could receive and be informed that it's out there if you signed up for our Twitter. We have a lot of new blogs. We have 3 new blogs. We have a lot of videos that are coming out each week. So if you're on Twitter with us, you know exactly what comes out. So it's just easier. Then just play the game. We give you the chart, as I've shown you before, and then we ask you to vote, to cast your vote. So in this case, this particular chart, people voted that it was distribution, 54%, 116 votes we had for that particular game. And then in a couple of days, we give you a solution. And not only that, we actually give you the Wyckoff story. This is the description that our content team works on, and then I go through, and then our editor works on. So it's a team effort to come up with this solution slide. And this is just such a great education on the weekly basis that you could have for free, not even attending the class. And you will have the access, to me and to our resources and to our company. I would highly recommend you guys to sign up on the Twitter. Anatomy of the trade. I mentioned Aurora Cannabis. I'm not going to go into a lot of details of why I have a position in this stock or what kind of position I have. I really would like you guys to make your own analysis and to go through your own analysis first. And then in the second class, this is where we're going to go into a lot of the details. We're going to look at the long-term picture. We're going to look at the short-term picture. And this position that I have, could work out, might not work out. I don't know, and I don't really care. I just have it. And I think this is an interesting group right now. I'm looking a lot into that group specifically, for some of the things that I usually look for in the candidates during the selection process. So I want you to just do your analysis, but today, because we have guests, let's have fun. So what we're gonna do is what we're gonna do every time. We're gonna examine this position, and then we're gonna vote. Should we add, close out? Should we open this position? Well, in this case, the position is already open. So why don't we do this right now? Look at the chart. Think about this for a second. Look at the price, look at the volume signature, look at where we are. Think about the bias. And let's go to the poll. I'm going to launch the poll right now. Oh, I'm sorry. Ooh. Oh. Ay, ay, ay. I think I made a mistake. All right. Let me just quickly correct this. Apologies. So that just gives you a little bit more time to think about this chart. Again, the question here is, what would you do now? Would you buy it at this point? Would you short it at this point? or would you do nothing? So let's see how the voting is going. All right. Okay, well, while you still guys are voting, I'm gonna extract this information from our poll. I'm gonna show you that in a second. It's always interesting to see how people vote as a group. So it gives me a very interesting perspective as to what kind of sentiment we have in the group on this, on the specific position, or there is also a very interesting sequence as to how people vote on accumulation and how people vote on the distribution. So those are also very interesting. And I'll talk about this later on, and I'll show you more. Okay, so what do we see here? 51% of you are saying, let's buy it right now. And 37%, the next big group, is saying, let's just do nothing. We don't have maybe enough confirmation and so on and so forth. Okay, so, and that's how we would be doing this. We would be analyzing the stock. We would vote first, then we would analyze. We would know exactly what position we have, and we would be analyzing, a short-term picture, long-term picture. We would be thinking about different scenarios and how the price is going to unfold. Is actually basically we're just going to go through that during the semester. So a fun exercise for us to have throughout the semester. So I'm looking forward to that, and hopefully you guys look forward to that as well. All right, let's start our theoretical material. When I started teaching this class, the biggest focus for me in educating other people, how to look at the chart was very basic. What I've realized working with a lot of students and a lot of traders is that there are kind of like common mistakes in the way how we look at the chart. And those common mistakes are usually either in the analysis, either about observations. We usually just basically have poor observation skills. If you don't believe me, go out on the street, walk for 5 minutes around the block, come back home and write down all of the details of everything that you've seen in 5 minutes of your walk. And I bet you that most likely you will not be able to, list all of those. So think about the chart as well. How many data points we have there, right? So for instance, one bar could have a bias data point. It's up at the close or down. It also could have a data point on the close relative to the spread itself, right? Is it in the upper part or a lower part? We have a data point on the high and the low. We have a data point on the open. Open relative to the spread where it was. Then we could go outside the bar and we could extend the series of data points that we need to collect. What about close to close relationship? What about let's say a high of the previous bar to the open of the next bar, or to the low of the next bar? What is the percentage of advancement from close to close, from high to high, from open to open, from low to low? Um, and I'm just talking about one single bar. Think about the volume signature, how that affects us. So there are so many data points that we need to address. When we look at the chart, in a lot of cases, our observations are just not sufficient, not enough. And that's kind of like one of the main things that we work in this particular class, in the practicum. we are developing the skill to make the correct observations, and that's extremely important. The second biggest issue that I've figured out, working with students, is that sometimes our deductions about what we see is incorrect. So we deduce or induce rather, something that maybe has relevance to one time frame but not another. Maybe it's relevant to a short-term context but not a long-term context. And there are a great number of issues and mistakes that we make with our deductions. So we're gonna go through the exercises, and as we go through them, we will develop a specific way of how we're thinking about analysis of a chart. What do we look at first? What is the important elements for us to observe? And then what kind of deductions we usually and regularly would make based on our observations. And obviously, those deductions and observations are all going to be in line with our intent, which is to find the bias, whether up, down, or sideways, to time that bias correctly, because we want to be efficient with our capital, and to understand in the selection process what is the best stock to choose or the instrument to choose that will have the most favorable character on the next move. And that's what we are basically dealing with in the practicum. Oh, okay, so I've talked about this, outliers, mundanity of excellence. This is just a duplicate chart slide. Okay, let's quickly talk about what we're developing at Wyckoff Analytics. The new program that we have that is being launched this semester. And we're going to have the new website probably in a couple of weeks, so there's going to be more information on this. We have launched a certificate of proficiency in Wyckoff method, and we dedicated the certificate to Henry O. Pruden. Henry, Hank, or Dr. Pruden was my teacher, was my mentor. He was a teacher to a lot of Wyckoff traders and students. And unfortunately, he passed away in 2017 after the best of Wyckoff that we had. And this is something that Hank and I discussed a long time ago. Hank had an idea to have a certificate in Wyckoff method at Golden Gate University, where he taught and I taught as well. Unfortunately, with his passing, the whole program has been axed, and we only have a couple of classes there that are left, so hopefully they will come back to us and they will reinstate it. But meanwhile, we're just kind of following the footsteps of Dr. Pruden himself, and I talked to the family, about using his name, and they're just extremely excited that Hank's legacy is going to be preserved like that. So I think it's very appropriate. So if you would like to finish this certification, and this certification is just for you, this is basically to tell you that I have taken the courses that were recommended on the subject of Wyckoff methodology, and I have taken all of them, and those courses are should be enough for me to recognize that I have the knowledge and the skill to trade the Wyckoff method. And we have 5 mandatory courses and then 3 electives that you could choose yourself. So something new, something exciting. Check it out, guys. And if you have any questions, just email us on this. Speaking of questions, Elle has a question here, and that is on Aurora. Let me see. Okay, too late to September 11th, the earnings for ACB. Therefore, Alice saying it's late to sell before earnings. Hold for the next earnings report. ACB's fundamentals not great because it overpaid on some growth acquisitions. So we'll talk more about, some of the stories in that space as well. Usually when, I open the position, I don't open the positions just in one stock, if I'm campaigning the stock, right? So I'm usually spread out. So this is just one of the stocks that I have in that space. And we'll talk about that overpaying for acquisitions. This is the disease is not only for Aurora in this space, but for other stocks like Canopy as well. So we'll have those type of discussions. Thank you, Al. All right, let's go into the next segment. So each class, as you guys kind of already sense, has segments. One of the segments here is going to be for us the question and answer. And I usually don't encourage students in the WTC to have extensive questions until the end of the semester. Usually their questions, and as you guys know, who have taken this course, come in anticipation of the upcoming material. So I usually tell them, wait until we are there. Ask then if it's content appropriate. I will answer this question, but other than that, let's leave it for the last session. In the practicum, we are doing it in a different way. And the reason why I changed it is because in the practicum, we have intermediate advanced students, and those questions are really important and relevant to our current discussions. So therefore, I'm going to show you guys kind of like a segment of how we dive in and go into the Q&A each class. In each class, you guys can submit your questions, and we'll go through those really quickly. So there are two people who submitted the questions. So Simon, thank you so much. Again, from sunny Sydney, would love to be there. Definitely, gonna go to Sydney and to Australia. So let's plan on having some kind of wake-up sessions there. A series of questions. And Simon, I think from the last semester, I remember the questions about the tests, and I thought that we've addressed them. But, repetition is fine, and we're going to go through this again, so thank you for submitting. Right away, Simon is saying that the context for answering this question is such that we're looking at the environment under the accumulation or an uptrend. So right away, guys, think about the structure that we have here. Accumulation, trading range, or an uptrend. So what do we look at here? What is the purpose of the test? That's the first question. And then the answer that Simon is giving is that the purpose of the test in accumulation or an uptrend is to test the supply back into the price area where the test has occurred. Is this correct? Yes, absolutely. We want to test, if we are in the uptrend, what are we testing? We might say that these are the tests that come at the line of least resistance, at the support. And every time we have some kind of reaction, we might have some kind of increase in the supply signature. And we're testing the availability of institutional desire to come in and to support the price at this level. I'm going to say this in a different way. Every time we are having some kind of test, we are testing if there is sufficient interest on the demand side to come in and to absorb the short-term supply that is available. And usually when we talk about, somebody's coming in on the demand side, those are going to be institutions. Those also could be professional traders. There are a lot of the traders here that are going to look at the mean reversion trade. Just because we're in the short-term oversold condition, this means that the price should come back to a mean, right? If we were in the overbought condition, those traders will be shorting. If we are in the oversold condition in the uptrend, again, extremely important to remember the context of where we are, then they will be buying in anticipation that not only the price will come back to the mean, but it might also overcome it into the next overbought condition in the uptrend, and that would be a swing trade. An example of this concept, actually, we probably, well, let me just show you guys really quickly. Okay, so an example of this, both concepts, is going to be this most recent trade in gold that I'm in. So I am long-term companion gold, meaning that I have a cash position in gold. I have opened this position here. Hold on a second. That was in April. Yes. So that was the first time. So back in April, and then in May, I think either here or here. So there were multiple entries for this position before the price started moving up. I was not adding on the stepping stone, but what I've done just recently, specifically here, is I hedged this position. So my hedge is acting against my main long-term campaign position. And we'll talk about why we do this and when would we do this, more importantly, because the timing with hedge is with hedges is going to be extremely important when you actually do this. And also, I'm having puts here against the cash, so you need to understand how you actually calibrate your position in such way that it becomes neutral. So instead of your equity line doing this, just basically reflecting what the gold is doing, with the hedge, your equity line should just be something like this. So this way, you're not losing some of the unrealized gains that you already have in your cash position. And when there is going to be some kind of rebound from here and you close your hedge, that cash position should increase your equity, and you basically should have something like this. So this type of more advanced concepts and techniques, we're definitely going to discuss a lot. This is just an example of that. I don't think I'm going to go into the analysis of this. I don't think we have time. All right, so those are the tests. Yes, we are testing definitely the supply, but also I want you to understand that we are testing not just supply. We are testing if institutions are willing to step in and to absorb that short-term supply that is being provided to the market by weak hands at that point. So you could state it in a different way. Another question, how do we identify a test? Is it a swing low or a hammer candle? So I've highlighted this because a swing low could have different type of reversals, right? So it's not necessarily that we could have some kind of hammer or we could have some kind of candle that's going to be a big reversal candle. There are so many variations. We could have literally a candle like this that's going to be really average candle, and that could be the end of the swing low, especially with the lower volume signature and with the LPS type of scenario, and that would be it. So we can't really say, I would say like a swing low, but probably not a hammer candle necessarily. And the question here is, how do we identify a test? Can we have testing at the swing? This is the second question. Okay. So different type of variations, but the main theme, and we've discussed this in the WTC course, and we will be talking next class about the significant bars and the reversals. In the swing, how do we identify a reversal and how do we confirm that reversal? So that's going to be talked about in the next class. But we need to have some kind of significant bar to reverse the less commitment to the downside, and that's what would define, that reversal and would confirm the test. Can we have a testing at the swing high? Yes, absolutely. Checking for demand, or rather checking if the institutions are providing supply at that higher level. That also could be interpreted like that. What is regarded as a successful test? And here we usually would say successful test is going to have a higher low, and preferably we would see some kind of diminishing volume signature going into the test low. Now, this is not necessarily exactly how it should be. We could have a variation where this higher low could be slightly lower and still have a reversal, and where the volume signature actually could increase. And then that volume signature increase is going to show us that there is a demand behind that volume. So we could have both variations. So then where is the truth? Where is that concept that would tell us that's how I'm going to do this when I look at the tests? The key here is to understand a result. What is happening with the result? If we have the volume signature that is diminishing on the higher low and the price then reverses, then we're saying that the reversal confirms the success of the test. If we have a lot of supply coming in and there is an absorption, aggressive absorption by institutions as they provide the demand, and we have the reversal and confirmation that that swing is done, and the result is such that we are progressing to the upside, that was a successful test as well. So you could have different structures for tests. You could have different volume signature for tests. But your key definition, whether it was a successful test or not, is going to be based on the result of what has happened after the test. And that's why we talk about a confirmation. Simon is asking, so is the true result of the test not so much the creation of the higher low itself? Now, okay, because we're in this advanced course, I'm going to show you a test that's going to have a different structural point. Simon, how about this test? Sell-in climax, climactic, volume, and then a test, secondary test like this. And then the volume signature goes down. So what do we have here in terms of and then the price goes up. So what do we have in terms of available information to us for the definition of the success of the test? The volume goes down. We usually say, yeah, we want to see that, so that's successful, but we have a lower low. So structurally, it's not successful test. Usually in WTC course, I teach the material in such way that basically tells you that the test should be a higher low and lower supply. This is the next level of the confirmation. But for those of you who are more advanced, and especially in this class, sometimes our secondary tests are going to look like this. And still, the climactic action itself is going to be prior to that. And that test is going to come as a low or low. It might have another test somewhere here, further down the road as a higher low. And we could identify that. But we should understand as advanced students that the tests could happen this way. And the biggest thing for us to in the identification of the successful test is what happens next, the result. Okay, last question. What is the concept, process of evaluation, action, and test? What is considered the action and what is considered a test, and the identification of this? So this is a very interesting concept because, and Hank loved, talking about this concept, because we could literally have this concept applied to so many things. We could say that an actionable bar, which is a big bar, has some kind of test after that. And by the virtue of how the next bar behaves, we could deduce as to what's going to happen next, at least short term. So therefore, the first bar is going to be action, and then the second bar is going to be a test. I would say that the next action is going to be either confirmation or failure. And that's also extremely important in this sequence of action, test, and failure. Well, if we're talking about the bars, how about we talk about the swings in the market? So how about we have a swing up and then a swing down? A swing up will be an action, and swing down will be a test of that action. Would that be appropriate as well, as an action and test sequence? Absolutely. And then again, think about the confirmation of failure. What is going to come next? And that's also a test. Well, how about this for most radical thinking on this concept? How about thinking about the phases as action and test? For instance, action to the downside as a downtrend, action as a selling climax, and then the test of that is either an automatic rally, the test that the environment is changing, or the test of it is that the supply of the downtrend is done, right? So those are local action tests. How about this? Action as phase A, and then multiple tests after that. Test here, number 2 in phase B, test here, number 3 in phase C, and then even test 4 at the higher level in phase D. Simon is saying, so is the process action, test, confirmation? In my mind, I thought the test is the definitive answer or the confirmation. And see, when we talk about these things, they make more sense because we have in this dialogue right now with Simon, he's just, typing in and I'm just reading his comments. That's where the truth comes, in my opinion. I see this a lot as a process, as a teaching process with students. When you talk to people, that's when we see, the truth. And the truth here is that you can use action test as a concept on different, as I'm shown here, on different levels here. But at the end of it, a test itself does not necessarily mean that it's successful until we actually have a confirmation or a failure. And we just have to wait for that. And that's why the significant bar technique is so crucial to understand how the swing reverses, confirming the higher low on the swing here, let's say after this reversal, acting as a confirmation and suggesting that the price will go up. And at that point, we will make an assumption, would it overcome the high? Would the character be such that it's going to do so very rapidly or slowly, and so on and so forth? All right, Simon, really good questions. So I'm looking forward to the next week with your questions. Let's see where we are. We're at 4 o'clock. Okay, great. We're doing well. Let's go to other questions. And these questions come from, I'm going to mispronounce the name. Johan. I think Johan. So Johan, let me just see. Are you here or not? Yeah. So hopefully I'm pronouncing the name correctly. So this is a very interesting work in the sense of the commonality of the mistakes throughout the charts that were sent. So just for the purposes of this particular class, the first session, and just for the purposes of highlighting how we go into a lot of the details in our analysis, I would do this and I would go through all of the Johan's charts. In reality, we obviously have, quite a few students in the class, and this is just the first session. So once we go into the semester, deeper into the semester, where I probably would prefer to have maybe like a couple of charts from you guys for each session, and not 5 to 10 charts or so on and so forth. But we'll go, hopefully quickly through some of the concepts here that Yoshin is discussing. All right, so the first concept here, when we see the context of the uptrend and we see the structure, we know what has happened afterwards. It's a downtrend. So the question here is, how can we know that this was a distribution? Because the volume signature seems to be very low, so it's not indicative of the distributional pattern. Okay, so let's address this question, but also on the background, I want everyone to think about the commonality of the mistakes that a trader makes from chart to chart in the analysis, and then we'll kind of like conclude, with the summary of those analytical mistakes. So if I would be trading this, my inclination here would be to go and to look in the at the bias, which is at this point is up. On the change of character, there is really not a lot of supply that is coming in. It's very mediocre, and that reaction does not produce a big retracement. So at this point, we're still thinking that this is a reaccumulation, and all of our short-term trades are going to be to the upside. So anytime the price comes down in the trading range, we would be thinking up, up. And then we would be making a judgment to the progress that the price makes to the upside. An upthrust right here, commitment, and it overcomes the resistance of the climactic action, so that looks really good. A little bit of the increased volatility and increased volume signature here suggests that supply has increased. What would we do next? Well, we will keep this in mind, but we want to see some kind of test. Coming back to Simon's question, a high or low on the diminishing volume signature. Do we know, let's say on this bar, that the test was successful? We are assuming, Simon, that the test will be successful, and we only are confirming the test once we have that reversal. Once we have that reversal, we are anticipating the price will go up, and we are facing a series of other questions at this point. But that's how we would be thinking about the test. All right, and then at this point of time, when we look at this formation, all we're thinking about, okay, so maybe some phase analysis, A, B, and we're thinking, okay, well, this could be B, and then we could have maybe a reaction into C, and then up movement, or if we're thinking, yeah, and the phase analysis would not allow us to put a C here. This is a little bit too much. And then B, we always want to be the largest phase. So even on the structural analysis, that doesn't kind of feel comfortable. But my point here is that look at the volume signature. And this is what Johan is referring here to. This is the biggest problem. What do we do with that volume signature? Well, I want you to think about not just necessarily supply coming in and showing its hand. I want you to also think about the demand. Think about the demand in the uptrend and what kind of signature it has that it moves the price like this. And then look at the latest demand signature and analyze it against that uptrend. And we could see that the demand signature is so low. It's probably -2 times lower than on average than what we have had on in the uptrend. So that is a concern. Whenever the demand is like this, you always have to look at the result. Are we advancing in the price action on such diminishing demand, suggesting that supply is even lower at such point that the price can move up? And we don't see that here. And it's very subtle. And you just have to develop the anticipation when you see a picture like this that there could be a failure. There could be a reversal. And this is, I think, where the mistake was made. The mistake was made actually kind of thinking and analyzing of what's happening in this area and then given less weight to actually the failure itself. And in some of the instances where we especially discuss any type of the structure that would be given to a leadership, right? So where, let's say, a leadership has upsloping structure like this, where leadership has maybe a short-term change of character, reaccumulation pattern, and then has an upthrust. So this type of structures are always going to be confusing to us because they're going to have a lot of elements of reaccumulation. And this is what we are studying, in the WTC course. So Johan, if you have a chance, to attend the WTC course, this is exactly what we would be studying in there. But let's say that we missed all of that. And to me, it's still, and I would say, I would agree with Johan that it's just really hard to differentiate this type of volume signature and this type of bullish, structure as a distributional pattern. So what do? You have to concentrate on the failure itself. Here's a failure to advance in price. Here's the failure to observe the emergent supply. And it becomes a sign of weakness and LPSY, last point of supply. And here are a lot of points where we can establish the position, and that would be just a very good position. All right, let's jump to the next one because we have quite a few here that we need to discuss. How do you know it's back holding and not selling by the CO? So let's talk about the back holding as a semantic. I really like this. I was just reading something just recently by Wyckoff himself, and he had that back selling, back holding. So the concept here is that there is some kind of bag that the CO has, and then all of the shares from all of the weak hands in the situation like this, where we have a very clearly defined climactic action that comes on earnings reports. And this is where institutions such as basically opening up the bag and they're holding up the bag to absorb all of the shares that are coming their way on an event like this. All right, so that's our bag holding right there. Now, analyzing this structure would probably bring us to some conclusions about this area right here that is being noticed and mentioned here. So let's kind of see what happens prior to that. Definitely a lot of the buying by itself, such extreme volume signature that from average demand signature, we are seeing probably an increase by what? 1, 2, 3, 4, 5, maybe times 5 times 6. That's a substantial increase in the volume signature that would suggest not only an increase in the volume, not only the increase in the supply that comes from weak hands as they are capitulating, but also an increase in the demand signature. Why would the demand signature increase? Well, institutions that are contrarian in nature, value investors. I see in this point as a point of value just because it's deeply oversold at this point. And they are seeing this as a high point of liquidity. And because their size is humongous, they need a lot of liquidity to get into the position that they want to go into. These are the two requirements from WTC course that we study for institutions. So looking at the selling climax itself, we know that we are in a deeply oversold condition from the high of 400 to the low of 200, that institutions are present, and therefore we might think that this could be an accumulation here. At least, a short-term accumulation that could lead us maybe to cover the gap. So therefore, with this idea, then we go through the analysis of this structure. We see that there is a quick recovery on another volume signature confirming the bias. we're seeing that as the price goes below twice, the supply that comes is not that great. And the last time where we have the commitment, we have an effort to push the price down, only one commitment below the support, and then the quick reversal on the expanding volume signature. So demand is expanding, and even though supply is expanding, it doesn't produce the same type of movement that we've had before. It's a more laborious movement. And I'm sure if we would go bar by bar, we would probably find even more evidence that this particular structure was an accumulation. But let's say that we completely missed all of that. Then what would be the test? And here is again this reference to the test question that Simon was asking. So you guys kind of could see that during the class, it's an ongoing discussion as to how we look at different concepts, and then we'll look at the chart and we're identifying all of those concepts. So is this a successful test with the high volume signature, Johan? Well, based on our conversation with Simon, it should be, right? Well, first of all, this is the volume signature here. So if we look at the latest supply is diminishing. So this green bars, they refer to this swing right here. So we see that the volume has diminished. But what if our test looks like this, where the supply is increasing? And is this a test? Yeah, absolutely. It's a test of multiple things. It's a test of this area right here, and it's a test of the climactic action that we had on this sign of strength right here. And by itself, it's phase C, so intentionally, it's a test by itself. But the supply has increased. Still high or low, supply has increased. And it's only the recovery and the confirmation of this recovery, together with the structure where we're thinking we are in phase D at this point, the confirmation gives us an understanding that that test on the increased supply signature was successful. All right, let's go to another one. I'm going to go faster at this point, although we're at 4:15, so plenty of time. That's great. Okay, so let's look at the next example. How do you know it's backholding and not real supply? And we're being referred to this point right here. So very interesting, because contextually it's the same situation, right? Contextually we were in the downtrend on the previous chart. I've mentioned that we had a very extreme volume signature. Now please note that we had the same type of volume signature before. I'm going to come back really quickly to the previous chart, and I want to show you that distinction. This is different relative to what we've seen before, even this bar right here, to what we are seeing on this chart. This is probably more of the volume spike signature that comes quite regularly throughout this chart. So therefore, this termination of the down move could be just intermediate, and we don't know yet. We need to confirm or deny that, right? So what do? We go through the analysis of the trading range, and we're trying to find some kind of definition of the bias. And we're seeing that throughout this whole formation, demand could possibly push the price up. It still finds some supply, and every time we're going up, supply is present. So look at how supply is increasing every time we get to the top of this formation. This is exactly the bias exercise that we would be doing. Also, let's see where the price stops. So the price stops at the areas where we have a lot of movement to the downside. So here and then here. So this is the value zone for institutions where they sold. So this is a selling value zone, which is institutional. They sold on the way down right here, So if they sold on the way down, what we want to look at the information is every time the price goes up, does it encounter emergence of the supply from institutions at that level? And if it does, then most likely institutions are still selling and we are probably in the redistribution rather than in accumulation. So, and we could see that from this volume signature right here, this volume signature on this bar right here. Now the price goes down and we start seeing the opposite. We're seeing now the increase in the volume signature as the price goes down around this area right here and this one as well. And we're starting to think, well, what is happening here? All of this pushes down. We are not really going down that much. And when we do, the demand signature also increases. And that stops the price from moving further down in a much freer manner, much freer way. So with this change of conditions, what we are doing is we are waiting for some kind of confirmation. If this is a change of behavior, would we have a confirmation that instead of the bias to the downside, we might have some kind of bias to the upside? And we do. There is a recovery above the support level. So again, we have a temporary commitment, which acts as a spring. We're coming back into the trading range with the test. And off we go from here. We're expecting that at least this causality should produce some kind of result, some kind of effect to us. But we're also very cognizant this is where the selling has occurred. So we want to see, would we be having some kind of increase in selling as the price goes up? So we know that most likely this might be overcome just because of this substructure here. And it does. And when we do see this overcoming of this area, we want to note those points of how supply is acting at the same area. So something like this. And we see that supply comes in and it's not as high as it was before. Let's say on this bar or this bar right here. That's encouraging. That means that we're going to continue up and we're most likely going to overcome this resistance. And then as we do so, we still want to monitor the supply, and supply has increased. So that suggests that supply is still here in this area, in this original area of the selling that institutions have done. And if it's going to fail, most likely we're going to say that supply has increased and we're going to continuation to the downside. And it does. And supply increases more on the way down. So that confirms the bias to the downside again. High or low, a lot of demand is coming in, and it seems like a very aggressive push to the upside. Effort is increasing tremendously. And what do we do as a result to the upside? It's diminishing because it's a, low or high, and it still falls into the same value zone for selling for institutions, and therefore that suggests that if we're going to have some kind of failure, now we're going to have a move to the downside. And that failure comes on the increase in supply somewhere here. This would be a really great point of entry for us. So as you could see, guys, and Johan, hopefully that gives you an example of how we analyze the chart here in this class particular, obviously a step above, WTC. So if you haven't taken WTC course, I'm not even going to entertain any ideas that you're going to come here and without any preparation to do this type of analysis. A lot of people, have come to this class and they have failed, to be at the level that I want them to be as students. So right now, every time somebody asks me, could I take the practicum without taking the WTC course, I just say plainly no. There's still, in my mind, there was no single person, who kind of went through the process and I was satisfied with that. All right, let's go to the next one. Really quickly, again, I'm looking at the time for 20. No, we still have plenty of time. Okay, so let's just see where it's going to take us. Right away, where we have the question, don't start with the question or the point where the question is. Start with the context. We had a speculative move up that had a TP formation with the distribution on the way down. So right now we are in the down bias. We see the confirmation by the volume signature. We see how we had a test and a test to the stopping action, and that test was successful, even though, and I hope Simon's going to catch this, even though this was a slightly lower low. How could this be? How could the test be as structurally as a lower low? Well, the test has all of other characteristics that are needed for us to confirm that this is a test by itself, and then further action is going to confirm that this test was successful. So a confirmation of the test is extremely important. So now with that, we know that there is some kind of testing that suggests the rally. We want to see what kind of rally we're going to have here. Again, the logic is going to be the same, and the logic as to how we analyze the chart is going to be the same from chart to chart to chart. As you could see, I'm talking about the context first. I'm not talking about a specific bar. Then I'm looking at the context more local, what comes prior to the point of interest. And we said that, yes, we see a number of tests in the that suggest the rally in the environment that's still to the downside. If we are in the environment to the downside, then we definitely want to, again, identify the areas where institutions have sold considerably. And this is this bar right here. So we want to see the price come back here, and we want to understand how would the price react around these levels. So every time the price would come back here, there would be some kind of rejection, and then this bar happens. This is the most exciting bar on the upside. Weekends are going to be thinking that all of the shorts are going to capitulate, so the price is going to go up, but still, it's too much to bear on the background. This context to the downside is just too much. So we need to see whether we're going to have a continuation and actually we can get out of this selling zone by institutions, or are we going to have a failure and the price is going to come back below this level of the support, and the price does. So at this point, we would be thinking that this could be a point of entry for us for the trade to the downside. Okay, so what else here? I saw this as an effort versus result bar. So are we sure we're looking at the same bar? So this is the bar, although we are discussing this bar right here. Okay, the volume was much higher than the red bar before, and the result was less. Okay, so I see. All right. Okay, let's look at this really quickly. So the volume is increasing, so we're thinking that the effort to push the price down is increasing. And yet the result is decreasing relative to the previous bar. Why? Well, because we have a higher low here and the close is higher. So the result to the downside is decreasing. Increasing effort to push the price down with the decreasing result on the higher low suggests a bullish behavior. And here is the problem, with this analysis. Everything is correct here, but because we're expecting a bullish behavior, in what time frame? We're expecting the bullish behavior coming out of this particular formation. So we are expecting some kind of rally. Did it happen? Yes, it did. The rally has happened. Your analysis was correct. I'm not sure about the conclusion at that point, but my conclusion was that the next move is going to be a rally, and the move is going to be bullish. And we had a rally, and that rally just failed. And that's it. That's all she wrote about this, right? But again, I think that the mistake here was, and the issue was, again, not identifying the context correctly from the beginning, and then kind of like, let's say, putting a short-term scenario as the analysis of the overall structure. So, and that's very common, issue in the analysis that I see, in almost each class. I saw this as a diminishing supply, but it was obviously no demand. So are we talking about this here? It's actually, the supply signature is actually, on average, is quite high. So I still would be thinking that, yes, indeed, the volume signature diminishes, but relative to the previous levels, we still have a lot of supply. So there is a lot of supply right here, as there was a lot of supply on this bar right here. Okay. All right, so we have quite a few here from Johan. So what I'm gonna do is I'm gonna come back to this if we still have time, because these are some interesting case studies that we still have to go through, as a Q&A. But hopefully this is a good example for you guys as to, how do we deal with the Q&A for the class.